Hey, ever heard the term ETF? Let's talk about it. Join me. Hi, folks. Welcome to the podcast, The Way I See It, which is just my podcast on money, finance, economics, personal investing, even politics and intersection of all that to create topics we can all learn from. This week, I want to talk about exchange traded funds, or what we call ETFs. I want to talk about what they are, how we can use them, and all that. So let me give you an example of what's going on in the world today. We're now global, I would say global citizens. If you go to your fridge, I'm pretty sure you'd have a drink from, say, the US. Maybe you drive a Japanese car. Maybe you're watching a Korean TV. Maybe you're eating dates from Turkey. Maybe your clothes or your textiles are from Africa. So wherever you are a product of the global, economy. You're buying stuff from across the world. So same thing with investing. If you want to invest now, it's possible for you to invest across borders. It's possible for you to invest across securities. So just like a question for you, let's say you want to buy a football club, or you bought for a football club and you're trying to buy players, and then you try to buy Messi and you try to buy Ronaldo. Now, the cost of those two guys is almost €1 billion. How can you do that? How can you buy all those guys and still have a team? Same thing in investing. How can you buy, say, Apple because you're a global citizen? You want to buy Apple, you want to buy Alibaba, you want to buy Shell, you want to buy Dangote. How can you buy all these companies if you're just a small time investor or just starting out, or you just don't have a lot of money? You're not a big time hedge fund. Well, that's what ETFs help you to achieve. Because ETFs basically are a type of security that basically are a collection of securities. So you have ETFs basically are a group of securities that are characterized by, say, location or by type or by, say, who's managing them. So for instance, an ETF could be geographical, to say, hey, we're going to create a group of securities and we're only going to invest in the US or in China or in Africa. So that ETF could name itself the Africa ETF, and that's basically what it is. So if you buy that ETF, you are then automatically buying the shares that ETF has bought, and those shares will, of course, be shares of just that geographical area that it has set out to achieve. Same thing if you're buying an ETF for soccer, if you're that football player. Instead of buying Messi and Ronaldo individually, you'd basically buy all the players in the Spanish league. And then, of course, you then own all those players. So if you buy, for instance, the Spanish player ETF, then you have shares in all the Spanish players. Immediately, you just pay for one share of your ETF. So you can see ETF, what they do is they combine either the market or the geography or the investment style into an investment that you can then buy. So if you want to buy all the stocks, for instance, in the whole world, there's an ETF for that, VT. You could buy the VT, and that basically gives you exposure to all the stocks issued in the US, in the UK, in Asia and all that. So that's a very, very quick way for you to buy at a low cost. And remember, you're buying all the shares, all the players, so you're diversifying. If Messi is injured, there's always Ronaldo, so you're not like stuck with your funds just in one company. You're diversified. You can buy all these companies at a low cost of just buying one share of that ETF. So it allows you to diversify at a lower cost, and then you can hold those securities basically, and then you become a global investor. That's basically what ETFs do. But the one I like the most about ETFs, or the type of ETF I like, are the index ETFs. Because like an index, basically, is basically a portfolio that represents the segment of the financial market. So if you watch the investing TV, you see the Dow Jones or the FTSE, the DAX, the CAC, all these indexes. And what they do is that they mirror the shares issued on that trading floor or that trading platform. So the Dow Jones is basically going to mirror Dow Jones 500, S&P 500 is going to mirror the top 500 issued stocks on the US market. Basically, the Dow that's going to mirror the 30 most highly capitalized stocks, more or less. So when you buy that index, you're basically buying the entire market. You're basically saying, I'm going to buy the average. So you're not going to do better in the market because you're buying the market itself. But then you've basically giving yourself a middle of the road approach. And if the market goes up, you ride with the market. If the market goes down, you may go down the market, but you are insulated from just the success or the failure of just one particular um, company or sector, as it were. So the index, you can have an ETF index fund that basically buys the index. You could buy the New York Stock Exchange index, or you could buy the Japanese index or the Chinese index, and you're then exposed to that market by just buying just one share. So what it does for us, like I said, is diversification. Number two is low cost. But let's talk about diversification. When you diversify, you spread your risk. So in finance, you're trying to then buy what's called uncorrelated assets. So that means if this asset goes up, that one goes down, and it sort of gives you a balanced protection from just moving in one direction where you could lose your money. ETFs also offer you the ability to target and to create a portfolio. So you could say, I'm bullish in Africa, but I'm not too bullish in Europe. So you could then go buy African-based ETFs and then ignore or short European-based ETFs. So you can target your investment specific to a geography, specific to a sector. You could say, I think tech stocks are doing very well, so I'm going to buy US tech stocks, the ETFs for US tech stocks, and then you're exposed to just that market, and it's also a very, very low cost for it to get that done. So that's basically what ETFs are. Nothing too complicated. We try to keep it simple. It's a very, very good way for you to start to invest. I always recommend, if you want to start out to invest, I mean, you don't know what to buy, just buy all the stocks, buy all the bonds. You could do, okay, what's the proportion? You could say if you're younger, you want to do maybe a higher proportion in equities, or you want to do a lower proportion in bonds. But if you just simply buy the VT, which is all the bonds, and then you buy the BND, which is basically all the bonds issued globally, you are already invested now in all the bonds issued and all the stocks issued. Of course, you can fine tune this when you talk to your advisor, but that's basically the whole idea. You can quickly, cheaply buy into securities, buy into countries, buy into investment styles by just buying the ETF, and it's cheap. The key thing also about the ETFs that differentiates them from the unit trust schemes or the mutual funds is that the ETFs allow you to trade during the day. So you could buy an ETF by 10 a.m. and you could sell it by 11 a.m. or you could get in and get out, unlike the mutual funds where you have to buy and then wait for the end of the day, and then of course get a net asset value and then trade for the next day. So the ETFs are a bit more flexible in addition to being cheaper, in addition to giving you exposure. That's why I like them. So I always say, hey, if you want to start out and you're not too conversant on the market you want to go to, you don't know the individual shares, or you don't have the time or the competence to basically go after the individual shares, try to get an ETF, do a research, buy the market and try to buy it, in segments. You could buy the US market, then you could buy the tech stock ETF, you can buy the financial sector ETF, but then that way you are approaching the market top down and you're covering your bases. Then before you can then start to buy the individual stocks, because that would need much more analysis for you. Give that work to someone to do for you. Buy the index, stay with the index is a cheaper way for you to grow your portfolio. Yeah. All right, guys. If you have any questions, again, send them to me. My Twitter handle is FinPlanCalo@one. That's FinPlanCalo@one. Do tell your friends about us. The podcast, the way I see it, is available basically all podcast sites, Spotify, Stitcher, Google Podcast. So look for it, share with it, and just keep being a fan. We appreciate you guys. Take care now. Bye.